Welcome to the FML Podcast, the podcast on a mission to uncover actionable insights, explore the latest trends, and to catalyze your fintech's growth. Join Growth Gorilla's founder and managing director, Shammer and Andrey, and some of fintech's hardest-hitting marketers and leaders.
Welcome everyone to today's episode of the FML Podcast. Today I have with me Andrey Dobrynin, co-founder at InvestEngine. Andrey, thanks for joining us today.
Hi Shammer, thanks for having me.
Do you want to tell us a little bit about yourself and your journey so far and how you ended up starting InvestEngine?
So about 17 years ago, I joined the team of co-founders of Gumtree.com, the classified website in the UK. They were trying to scale the business, actually launch new business in the emerging markets, and particularly in Eastern Europe. And I came on board, I became their first hire, and later the managing director, the CEO of the business. That was called Slando. We've grown it to really large scale, to 30 million monthly unique users, and it was later acquired by Naspers, the internet giant operating in marketplaces. My experience is very much initially was e-commerce, classified advertising, building large scale communities, and this is how I started. When Slando was sold to Naspers, I worked for the new owners for several years, running their operations in Eastern Europe. Several years after that, Simon Krukel, the InvestEngine founder, came to me with his new idea for the new startup, which is InvestEngine, and we started doing it together.
Let's talk a bit about InvestEngine. What is InvestEngine and why?
InvestEngine is the platform for the long-term investors in the UK. We saw a lot of innovation happening around trading. A lot of startups appeared for speculative trading rather than long-term investing. And we saw an opportunity and the gap in the market that an investor who wants to invest for the long term had to use those trading platforms which encourage speculative behavior, pushing you to trade frequently, investing in what other people think is good, which is not the right thing to do for the long term. And also, on the other hand, you had robo-advisors, which didn't give you the flexibility, that you would not be able to build your own portfolio, to invest in what you like. You simply give your money to someone else to manage. So somewhere in between, there's that gap and opportunity which we saw. So InvestEngine is currently, it's the ETF platform. We see exchange traded funds as the best tool for investors to diversify, build diversified portfolios for their long-term future.
I know that you've got two distinct products, haven't you? You've got the DIY product, and then you've got a managed product as well. Is that correct?
We have a managed product, yes. So we initially launched with the managed product only. It's a classic robo-advisory proposition. So we have clients, we onboard them, we then understand their risk profile, their ability and willingness to take risks, and then we match them to one of the model portfolios that we manage. So that was our initial proposition. We were not the first player by far with this idea, but we launched it as a sort of minimum viable product. We wanted to start engaging with the audience. We wanted to start talking to the clients and understanding their need. We saw existing players doing it for several years and still not doing it quite right. We saw that the robo-advisor proposition is still has a lot to improve. So we started learning and listening. And one of the main learnings was that our clients they had their own taste in investing. They wanted to influence what they invested in, especially when it's about such a long term. So we then started thinking how we can improve that, and we came up with this idea of commission-free DIY investing, and we became the first commission-free portfolio management tool, as we call ourselves. So essentially, we are a hybrid platform between a broker and a robo-advisor. So we're not a classic broker where you place a trade, it gets executed immediately. And we're not a robo-advisor where you simply give your money to a fund manager and they do what they like. Our DIY investing is, you build your model portfolio and we automate the management of this portfolio. You set the weights of your ETFs and we do the rest. So it's your portfolio, you invest in what you like, but you don't need to worry about regular investing, about rebalancing of your portfolio, reinvesting of dividends, and all the technical aspects. So you sit back and relax, and what you need is to simply fund the model and see it hopefully grow.
I suppose one of the questions that sort of comes about is you mentioned obviously that you're getting feedback from your customers. I always like to ask this, is this sort of proactive market research that you did, a structured approach to procuring this information from your customer base, or was it more based on perhaps more anecdotal from, via customer services and reviews and whatnot? How did you sort of procure that information?
It is both. So we did have some structured approach. We ran surveys, but we also listened to what our clients said to our customer support. We had a phone line, we had Zendesk tickets, and I personally read every single ticket and inquiry of a customer. That's what they like, what they don't like, what they think we need to improve, and that's very useful. And the bigger you get, the more feedback and the more idea on the priorities you get, because you get the volumes, you understand the pain points. It's both structured, proactive, and reactive as well, based on the feedback.
One thing I know is that you've had some really, really good growth. So you've clearly, would you say that you found product market fit? Do you feel comfortable saying that? And do you think, anything spurred on traction of InvestEngine, like the pandemic, or do you think it was just great timing?
Yes, I think we found the product market fit, and it's exciting. In a startup, and I've been there a couple of times, when you found the product market fit, about this. There's no chance you miss it because everything is exploding. The numbers, the hockey stick is going up and to the right. So all of that is now happening. It's very exciting times. At the same time, we had a few difficult years, and in any startup, it's not easy. You need to persevere. You need to keep going. You need to find the motivation. So I think the trigger for that was our launch of the DIY platform. As I said, we initially launched as a robo-advisor, and we were not the first robo-advisor out there. And we knew that we're not unique, and we need to find the USP, the competitive advantages. And this commission-free DIY ETF investing was something absolutely unique. The portfolio investing and the automations that we delivered triggered a lot of virality. People started talking about us. YouTube influencers were keen to create videos about us. We invested in our reputation. We started collecting a lot of Trustpilot reviews, very, very positive. And then it just started taking off from there. We launched the DIY platform a year ago. And before that, the growth was kind of linear. And after that, we are seeing really an exponential growth.
To just sort of almost like reiterate what you're saying, launch of the DIY platform, that triggered a product market fit. What did your sort of acquisition activity look like? How were you going about acquiring customers? Were you solely reliant upon referrals, or were you also conducting other activity to seed InvestEngine with new users?
Evolves with time and with maturity of the business. When you just start, certain things are impossible. We wanted to have some partnerships, and we wanted to approach certain influencers, but because you don't have the reputation, certain things are absolutely impossible. So for an early stage fintech startup, it's super important to invest in reputation management and building your initial reputation, and then taking it from there. So in the beginning, we tried everything. We tried things that worked, things that didn't. We dropped the things that didn't work. And what we learned is that best marketing channels for us are the ones where other people recommend us to others, where other people talk about us. It can be a refer a friend. It can be an affiliate program where influencers talk about us, or price platforms that compare financial products, or it can be a partner which already has a relationship with our future client. So these marketing channels where someone else is talking about you, they immediately boost the trust. So we started focusing on those. We kind of deprioritized channels where we are simply buying traffic. It gives you the numbers, but when you look at the conversion rates, at the main metrics, they're not so good compared to the other channels I mentioned in the beginning. So we gradually shifted towards those recommendation-based marketing channels, and it's working very well. The bigger we become, the more we are focusing on long-term, large-scale partnerships with other companies, with very well-established media companies that generate content. And early days, that was completely unavailable to us. No one wanted to talk to an unknown new platform that can disappear any minute. So as you go, it's becoming easier, but the early days, it's challenging.
Well, one of the things that you mentioned is that you kept the channels that were working, you dropped the ones that weren't. I'm always interested to understand, let's call it, how dependent are you on data, from a marketing perspective, and then also from a product perspective as well, and how much does that influence your decision making?
We use data a lot. We collect a lot of data, but I wish we used it even more. So we do collect information, but some decisions are still very much based on the strategy and the direction we are going. We of course analyze all the features and everything. If our clients are using certain features that we developed, we are looking at, say, popular searches on the app, what people need, and prioritize things accordingly. There are a few projects to use data even more. For example, and I'm talking about the investment management here, DIY portfolios. We know what our clients are invested in, what ETFs they're buying, what their portfolios look like, the exact composition, the performance of their portfolio, volatility of their portfolio. I'm getting maybe a bit technical here, but we can always analyze the performances and the risks of our clients, and we can say how they can improve their portfolios. We can help them, and that's our monetization strategy, to help clients improve portfolios or lower risks of their portfolios using our technology, because we have all the data for that.
You just hit on a good point there, because obviously it's free to invest using InvestEngine. How do you monetize your user base then?
We have two products. So DIY investing is completely free. And the second product is managed. This is where we manage funds for the client. So we have a fee, a management fee of 0.25% annually that we charge. It's a very competitive fee. In fact, one of the lowest for robo-advisors in the UK. And this is how we make money currently. About 40% of our funds are currently in managed portfolios. Although a typical client journey is to start with a commission-free DIY, try it, top it up a little bit, keep it for several months, and then try managed. And people initially think that they are great at managing investments, but when they try our managed portfolios, they can see that performance of managed portfolios are better. Well, often better. So those people, they migrate to managed, and we think that long term, as the time goes, we have most of our assets under management in the managed portfolios, managed and so fee paying.
From a product perspective, do you think you'll go down the single stock route at any point, or do you think you'll focus a little bit more on the managed funds area of the business?
So there's still a lot to do with the ETFs. It's an exciting product. We think it's perfect for long-term investors. It's also great for new investors. At the moment, we're fully focused on the ETFs. But yes, the long-term idea is to add single stocks, potentially other financial instruments, mutual funds. So that's where we are going. ETFs are growing very rapidly. The UK market is probably 5 years behind the US. It's still doubling every 4 years, 4 or 5 years, the amount of assets invested in the ETFs. And we think that it is going to grow even faster in the future. So it's...
Yeah, I think in the US, there's a platform called M1 that does exceptionally well.
Absolutely, yeah. M1 is our inspiration for InvestEngine. They've been doing this for many years, and they started as a purely investment platform, but they moved into other areas of financial technology. They are now providing lending, they're doing cash products. So yeah, that's quite a lot that they're involved in.
Just talking a little bit about the growth in the US of ETFs and then thinking about the increased marketing activity from ETF providers such as Vanguard. And at the same time, holding in the back of my mind, you mentioned obviously about working with YouTubers. Do you think InvestEngine, almost to a degree, not quite got lucky, but do you think you got lucky with timing, given the fact that there's been a rise in these finfluencers, platforms like Vanguard have been promoting themselves quite heavily? Do you think you picked the right pocket of time? Was that luck? Was that engineered by you? Or was that you taking advantage of the situation and having great foresight?
I think we used finfluencers very well. It was a good timing, of course. We benefited a lot from that. But at the same time, if not that channel, we would have found something else. Vanguard is investing heavily in promoting not just their ETFs, but their retail platform as well. And I think they're doing a great job in popularizing ETFs in the UK. That helps us a lot. We don't have to educate people about what the ETFs are, but not everyone knows what an ETF is, and there's still a lot to be done there. We don't get involved in the early education of clients. We prefer to target the people who already understand ETF investing. We think that early education is expensive, and we also believe that there are people who do it better than us. So we're not involved in sort of the media part of the education. In this regard, we're very happy when other people are doing it, and we're happy to support that, and we're also happy to benefit from that education. So finfluencers, other investment platforms, other startups educating people about ETF investing. We love that. Yeah, absolutely. There are ETF providers that don't have their own investment platforms, and we also partner with them. We benefit from the relationship with them. They want their ETFs to be listed on different platforms, and InvestEngine is one of them. And in exchange, we get some marketing from them. So we are working on certain partnerships. I won't disclose full details about that, but yeah, I think it's a lot of great things are happening, and different players are contributing to this. I don't even see it as a huge competition.
It's still at such early stages that it's kind of all to play for. My personal view is I think that free trade done a great job of opening up people's eyes to actually trading in individual stocks and shares. And I think that sort of opened up other players to come into the market and almost capitalise upon that. I'm always very interested to see what percentage of InvestEngine or Wombat or any of these sort of similar sort of providers, how many of their users started off on a platform like a free trade and then eventually migrated over.
Yeah, Free Trades, I love their platform. They're a great company. They've done a great job educating people. And I actually think that we don't consider them a direct competitor. I think we will and we can coexist very nicely and peacefully. I think they are still very focused on short-term trading, despite the fact that they are talking about the long-term investing. I think that people can invest for the short term and enjoy some speculative gains. That's fun. That's interesting. That's something to chat to your friends about. And I invest using free trade as well. But at the same time, I think that the majority of investments of a person should go into long-term portfolio. And this is where I see InvestEngine being most useful. We are the portfolio management tool with all the automations, minimizing the efforts of regular investing. So I think we can coexist nicely. So there's sort of a fun part and also the boring part, which we do.
I think you're underselling it. I mean, the majority of my investments are in ETFs, and I've got a regular investment set up. I've got a good spread between the S&P 500, FTSE, US stocks, and actually seeing my portfolio actually perform quite consistently moving upwards is arguably more fun than sitting on the edge of my seat wondering why Apple's down 15% on a day.
Yeah, that's right, yeah. To the second part of your question about where the customers are coming from, we monitor that very closely. This year we had a very successful ISA transfer season. That's end of March, early April is very, very busy for all the investment platforms. So we transferred thousands of ISAs from other providers. And we're actually seeing some overlap with the new players, with startups, but the majority of our clients and assets are coming from legacy platforms.
Okay.
From very well-established players, the names, Hargreaves Lansdown and the like, and actually Vanguard itself. So they are in our top sources of traffic, of money, and all the new players are there, but not at the top.
Out of curiosity, why do you think individuals are leaving legacy providers and moving over to challenger brands such as yourself?
Several reasons. Very high fees. That's the main reason. That's almost unacceptable now to charge very high fees like some of the platforms keep charging. And I think it's not sustainable anymore, and they will have to lower the fees at some point. But right now, it's the cost. That's the main growth driver for us, the cost of our competitors. But also, it's the technology. Very often, it's legacy technology, lack of features. When you see the beautiful automations that we provide for DIY investors, It's a no-brainer. You need to switch. People test us first and then transfer, so it's not an immediate decision, but yeah, it works. Also, it's the quality of customer support, customer service. Very often, older players, it takes days for them to get back to the client. You know the pain. So that's another major difference that we make. Our customer support is really something we are really proud of. It's very quick and efficient. We get back to the clients within minutes, not days.
So I kind of want to switch streams a little bit and talk about your recent crowdfund. Obviously, it was very, very successful. I think you raised, I think it was 1.3 million.
Yeah.
And that was, 200% of target, if I'm not mistaken.
It was, yeah, that's right.
I think the question I always like to ask is, was that done as purely as a funding play, or was that sort of done as also as a brand play as well at the same time, or yeah, a bit of both really?
Purely, it's a marketing channel for us. We realize that crowdfunding platforms are a perfect source of clients for us. There's a huge overlap in terms of the needs and the target audiences between InvestEngine and Crowdcube. It gave us a lot of quality customers. So purely we did it for growth. It gave us amazing results. I also think that the timing of the campaign really helped us. We started our round on the 5th of April, which is the last day of this financial year, where everyone is thinking where to invest their ISA. We had a really good ISA season because of that. Crowdfunding is really helpful for fintechs. It's a good marketing channel, and the target audience is spot on.
I agree. I think the audience is absolutely perfect especially for investment-based fintechs as well. I mean, it's you've got a pool of, I think Crowdcube have got about 1 million subscribers now, and I think Seeders has got about 700,000 subscribers. I mean, there's probably quite a bit of overlap there, but there's probably a pool of 1.2, 1.3 million that you can tap into who are interested in fintech, interested in investing, early adopters.
It is an amazing audience, very loyal, very responsive in terms of the feedback. They are our amazing community members. We are building InvestEngine. It's not just a platform. We're building a community of long-term investors, and Crowdcube investors are amazing in this sense. They give us feedback. They are product advocates. They always support us. So it's really good. Yeah. So with our crowdfunding, unfortunately, we had to close it sooner than we wanted to, because we went over funding too quickly. So the first 24, we hit the target in the first 24 hours, and we hit 200% in 7 days. And so we realized we are raising too much. We're diluting too much. So we had to close it earlier. We were not expecting that outcome, to be honest. So we may need to do it again, maybe later this year, maybe early next year.
It's interesting because prior to obviously clicking the record button, we were talking about the market and the shape of the economy. And obviously there's a lot of talk about being in recession and how it's difficult for all startups, not just fintechs, to get funding. But if you look at how Seeders and Crowdcube are performing right now, and fintechs are still able to raise money across both those platforms, it kind of contradicts the current state of the economy. It makes me think that perhaps we're a lot more buoyant than we think we are. And maybe we shouldn't be listening to the Bank of England, but not advice, by the way.
Not advice. I think we are facing several difficult years. In terms of the startups, I think the more established startups with the solid financial model will do well. It's more challenging and will be more challenging for new startups, early stage startups that need a lot of funds. I hear from the venture capitalists that they are saving some funds for the follow-up rounds of their existing investments. So the good startups will do well, but for the newcomers, I think it's becoming a little bit more challenging.
Either way, I suppose the wider market goes, InvestEngine can kind of play into both those sort of scenarios. The market's coming off, buying regularly and consistently, having a long-term play is going to yield dividends for your users, and obviously you're still driving revenue. And if the market's buoyant, it's only going to drive that and more, really.
Yeah, absolutely. Our audience, most of the people understand that there are difficult years, but they see it as a buying opportunity. And we can see it's the regular funding, the follow-up investing. It's not stopping it. In fact, for some clients, they've accelerated their investing because they see it, as a way to buy cheap and to capitalize on that in the years to come. Of course, there are people who withdraw, who panic, who understand it a little bit differently. But with our audience, I'm thankful that we have people who really understand the markets very well.
Before we head into our quick fire round, I think my last question really is, what does the future hold for InvestEngine? You touched upon, additional products, maybe additional funding. What do the next sort of 1 to 3 years look like for you?
Yeah, it's very exciting. It's amazing times for us. We're now reaching 100 million in assets under management. That's still very early days, but we started this year with 17 million. So you can see the growth is really exponential. So the future is to keep growing exponentially and listening to our audience, to our customers, and delivering the features and the products that they want. So far, top of the agenda is adding more ETFs. It's improving the platform, giving more transparency on the investments, adding more wrappers, junior ISAs, pensions. We have a few exciting partnerships with well-established players in the financial sector. So that's another major thing. And single stocks is a longer term plan, and ultimately scaling internationally. This is where we want to be. But first of all, we need to make it big in the UK. We want to become the ultimate platform for DIY ETF investors.
Amazing stuff. As we always wrap up our podcast, a few quick fire questions. What podcast do you have on repeat right now?
It's the Financial Market Leaders.
Are you reading any books at the moment, or are there any books you recommend?
I just finished a book called The Cold Start Problem. It's about using network effects in growing startups. It's a great book for any entrepreneur to learn from the best startups like Airbnb or Uber. And in terms of the books that I would recommend to investors, I really liked a book called How to Own the World. It's about building a diversified portfolio, about regular investing and investing for the long term. Google it or Amazon it, and it's a great book.
Other than InvestEngine, what's your favorite fintech app?
I think it's Revolut. I've been using them for many, many years. Started using it as a travel money, and then now I'm using it as an app for my children, as a debit card for children, crypto, business accounts, some great features. They are an example of a company that listens to the customer. Their product team call me regularly asking about some product improvements. So yeah, Revolut is the startup, well, not a startup anymore, a company that I admire.
What's the best bit of life advice you've ever received?
Focus on things that matter for the long run. Focus on things that impact your long-term future.
And my last question, and my favourite question, what's one thing that I haven't asked you that you felt that I should have?
Are you recruiting at InvestEngine? And the answer is yes. We have several positions open. Check our website and join our team. It's an amazing team and of great people.
Amazing. Andrey, thank you very much for joining me today. It's been great having you on.
Thank you very much, Amir. It was a pleasure.
The FML Podcast is brought to you by Growth Gorilla. To find out how our marketing growth experts can boost your fintech's growth, head to growthgorilla.co.uk. And make sure to search for the FML Podcast in Apple Podcasts, Spotify, or anywhere else podcasts are found. Don't forget to click follow to ensure you don't miss any future episodes. On behalf of the team here at Growth Gorilla, thanks for listening.